this is just I'm doing this to just do like a recap of just a recap of like what's been going on like trading wise, and I'm starting this just because I know for myself it's really kind of selfish for myself when I give out information. I'm able um learn, hear what I'm saying, understand when things that I'm saying are a little bit too complex. And then on the other side, I get to help other people because I'm spreading some information that I know about trading. Just a disclaimer, I'm not like a millionaire. I'm not so I don't have a Lambo. But I've been learning 2023, June 2023, I could told myself that I'm going to commit to mastering the skill set, getting better at it, and here we're in 2024 was my first profitable year. I had to spend a lot of that money, than that I probably touch on right now, which is just like trading. Trading is an income, right? It's an income, but at least what I've learned, like you always want to have multiple. I wasn't at the point in 2020, 2023 where I'm making so much money that I'm in surplus. I was kind of just like flipping small accounts, like taking like $100 to like $1,000 or something like that, or in some cases like I had a funded account, I was able to get a $4,000 like payout from that, um, or just like put like $700 into like or $400 into a broker, get that shit to like 1,500 or something like that, $300, get it to $1,700. You get what I'm saying? Like paying like bills like that. I was profitable, where I made more money than I lost, but in the end game, I didn't leave I didn't leave out of it richer than before because I had to spend that money. So kind of like to let's just talk about like I guess my journey, like my journey in like trading for real. Like like my journey in trading kind of has started like in different waves and like different like sectors, and kind of where I have to go back to the past in order to really focus on like the present, right? So at first it was very like pretty much technical analysis, right? That's decent. So it was just primarily technical analysis. So it was just like and I learned I just learned how to like really get really good at reading charts. Um from technical analysis I kind of moved on to macroeconomics, and I was really like macroeconomics and data, and I was really like um all of like 2023 was like I was kind of in between, like I was still going in between like you know chart the chart and like the spreadsheet, and now I'm kind of like stepping into my algo trading wave, right? And it's like in every stage, like I got a bunch of like Python code, like individual like Python code, just like hard drive that I have on my computer. That's kind of like where I'm at right now, like, and I'm kind of in this algo like wave of like algo and data. So like I still kind of do the macroeconomics. I still do the macroeconomics, and then I kind of look at the charts a little bit less. Like I just kind of go to the charts to just reference like price. I don't really spend a lot of time on the charts like I used. So let's just kind of like go. Let's just go back like okay. uh So technical analysis phase was like really my introduction to just like trading, and I made money. Like it was based off of it was confluence trading. And confluence trading is pretty much just like finding repeated patterns on on multiple time frames. So like the core basis of it was just like on the H4, and it's kind of like H4 time frame. I see like certain pattern. Let's say I see like it's called what, like a evening star pattern or a morning star pattern. So then I got like other crypto. I'm just as a random book. So you see like a pattern like this, and you will go down to like your M30 time frame, like, and you will kind of see. You might not see the same pattern, but you might go to the M30 time frame to see like the structure. You know, you'll see like a head and shoulder structure. This might look like a head and shoulder structure, right? And then on the M15, right, you're kind of looking for that candlestick. So it's like the structure, the candlesticks on M30, like all of them clumped up over the H4 time frame, just look like this, right? It's like a fractal. And then on the M15 time frame, you might see like in this last little area right here. Change the color to like red. In this last little area right here, on the M15 time frame, you're gonna probably see the same H4 candlestick where it's gonna be a bullish candle, right? You're gonna see some type of doji, and then you'll see it volume candle where it breaks this neckline, right? So that's just confluence trading, right? And that's pretty much what I learned. Like I was heavily into the charts like all the time, like where at night I'm just watching the market. Like it was fun. Like I made a game out of it. I was in like several trading communities where they made games out of it, and I learned so fast. Like, and that is still a style of trading, right? So if you're looking at this and you're wondering like, well, why the hell did you, like, if this was working and like, you're making money from this, like, why did you stop doing it? And there's still people to this day that still use this, and I'm like, what I'm learning now, I'm getting more mature. Like trading it's an individual sport. Like everybody has their own way. There is no perfect way. I don't think, like, some people just say technical analysis doesn't exist. For me, technical analysis does exist. It's just a smaller part of my process. Is smaller part of my process doesn't mean that it's not important, but I don't make it main focal. So to get to where I'm going with this, or why I kind of shifted out of the technical into like more the macro, was I traded a lot of like futures, so like US 30, Nasdaq futures, Dow 30 or US 30 is pretty much like the futures market, and I would have these days where all of the technicals are lining up, and it makes a lot of sense on like indices, like without the macroeconomic or like the background, you're not gonna understand it. Where it's like we'll see the same pattern, right? Or let's say we'll do a double top, like it's on the indices, and we'll see something like this. Now the technicals will tell you that we're just gonna keep going down, right? We're like getting a double top pattern, which is a major market pattern on a higher time frame, but literally like this right here is like perfect, but like minus the triple bottom. But it's like this is on like the daily time frame, like super high time frame, seeing some shit like this. But then what will happen is like it will reject and then immediately just take the fuck off and just keep going for like days. I would just be so confused. I'm like, yo, the technicals are there, this, and that, and the market would just kind of do what it wants. And then simultaneously, I got into, not simultaneously, but like the end of 2020, like the summer of 2020, I got into a car accident, and I was diagnosed with PCS at the time. I had a concussion, but then the concussion symptoms didn't go away, and then I ended up going to neurologist. They're like, you got PCS. PCS is post concussive syndrome. This means your brain is taking longer than it needs to recover from concussion. I got into a car accident, and basically, like, I was so used to doing everything where I just stared at the chart. And when you're like staring at the charts, or you're like waiting, or you're waiting for that perfect time, like I trust me, like I've been there where I'm like, yo, I'm telling you, every day I'm waking up religiously at like 8 a.m. to just see what the market's doing. So I'm just sitting back. I'm on what, I got my different pairs up. I might set an alert, and I'm just there and I'm waiting for the move. Sometimes the move come pre-market, like 8:30 a.m. at news. Sometimes the move comes at 9:30 a.m. when the market opens. Sometimes the comes at 2 p.m. like after some major news or something like that, and I would just be sitting on literally just sitting on the charts, like just watching it. Or then like when I'm in a position, it's like I'm losing my mind because I'm just sitting there just staring, like, all right, is it gonna go up? Is it gonna go down? Is it gonna go up? Is it gonna go down? And it was just very, very fatiguing for me. And at the time, having like the having PCS, post concussion syndrome, um, I just literally couldn't handle that type of trading. And then also with like post concussion syndrome, your it's harder, like your brain is responsible for regulating your emotions, right? And this is kind of, we're getting into like more science, but just stay with me. Like your brain is responsible for regulating your emotions, like not your heart. Like let's stay with your brain. So we'll just on, let's copy and so your brain is responsible for regulating your emotions, not your heart, right? Every like, and this might seem like common knowledge 'cause everybody's like love is associated with the heart and you know emotions. Everybody just looks at the heart like it's feel, it's like in your chest, like it's this, it's in your gut. Like these are like the languages that is used to the people think about emotion, right? But the reality is that emotion emotion emotion, right, are not regulated. They're not regulated by the heart. They're not regulated by the heart at all. Emotions are regulated by your brain. Like, and your brain basically it interprets the environment, right? And based off your environment, based off whatever, like the data, your brain, your subconscious, like whatever, even if you're not conscious of it, it absorbs that information, and based off that information, it decides how you should act based off uh survival, not 90% of the time of survival. So it's like, let's say that's like example, you could have situations happen where like for me, like I used to be a person, I was like very, very like shy around crowds. Like I can't say something happened to me like where something traumatic didn't happen to me where if I go around a crowd, um I just shut down. But for a while, like I would go around if it was a crowd of people, I wouldn't really talk. But like if it's like two, three people, my friends, I'm super, super chatty. And it wasn't that some again, like it wasn't that something traumatic happened. It's just like over time that just became a pattern for me. So then it would become like a point where okay, I will walk into certain spaces, or at least like when I started growing in my awareness, and I'm realizing like, all right, it's 20 people at this party, at this dinner, and now my brain is like, all right, we're gonna be shy right now, like which means it's like kind of overly conscious, and I'm not understanding that, but that just become the pattern because it's like, well, you did this before and then you did it again, and now the brain, your brain just wants you to be safe. So it feels like you were safe when you didn't talk in that crowd. So now when you're in that crowd, we're going to make sure that you're shy or you experience a certain, and this can happen in all, in very different situations in our lives. So when you're dealing with like PCS, it's a brain injury. So now your brain is dysregulated. Like it doesn't always pick the right emotions based off your stimuli or like what's happening in your environment. So it's like normally in a situation where I'm in a happy, I'm in a crowd of people and my brain would choose shy. Now instead it chooses to be confused, or it might choose to be sad, and you end up having these like crazy different like waves of emotion. So when we tie all this back into like the technical analysis aspect of it, right? I basically was sitting on the charts, and it's like I'm on whatever whatever timeline it is, H4 M15, and I'm seeing the chart doing all this stuff. My emotions are going crazy. I can't regulate it. So then I started making like bad decisions, or like I started going against my trading plan. Like I just couldn't manage my emotions to trade properly. And before that, I kind of would just like I was okay with it. Like you set your take profit. set your stop loss. You let the trade just play out. You just put your hands behind your back, put your hands on your lap, and you sit. It was so much easier for me to do that prior to the car accident. Post car accident, I'm like, I gotta move my stop loss, or I gotta do this, or let me move my take profit, and then, like, I would end up in these frustrating situations where I would allow my emotions to take over during my trading, and like I'll move my stop loss by like 50 points or some shit, and then it will not only hit 50 point. I'll hit the 50 points at like 10 a.m. after the market open, and then I'll come back to the charts and it's like up 400 points, and it's like, dang. Or vice versa. Like I'm sitting there looking at it, and I'm like, dang, I don't know what's going on. Like I'm experiencing all these emotions, and it's like, like it's just been stuck near. It's stuck near my my entry. It'll go and profit like a little bit, and I'm like, man, I'm about to just move my stop loss to break even. Move to break even, trade goes off, or like other, or it's like I'm gonna move my stop loss. All things that I know normally not to do. I have systems in place to stop me from doing that, but with the post concussive syndrome stuff, it just became too hard for it, and then staring at the charts became very fatiguing because all this movement and clicking and stuff. So I just felt like, yo, there has to be another way. So then I end up running into like this video from Anton Creel. He got trying to pull his network out. Some random white dude, right? Some random white dude, uh, right? Random white dude on YouTube that has like uh he pretty much like he trains people. It's like it's called the PTM Academy, right? PTM Institute of Professional Portfolio Manager, Trade Manager, something like that. And he basically just broke down a video talking about like how forex specifically was a scam, because that was like the asset that I was like trading primarily. Like it was just forex and a little bit of futures, but not real futures where it's ticks. It's like futures on the forex market. And when I saw the video, I kind of was like, damn, like this is what's going on. You started understanding like the like it's like when if you ever seen the Wizard of Oz and you go to they go find out that the wizard is just some small man behind, a bunch of curtains. And I'm not here to like call out anybody. I'm not here to focus on the negative aspects of like the trading industry, because they pry on people's lack of information, pry on people's need or desire to change their circumstances. So they just give people a lot of bullshit. But that's just the reality. Like that's just how life is. There's always going to be somebody trying to take advantage of people. Can I say the people that I feel like the people that taught me took advantage of me? No. I paid for information. I got information. It worked. I didn't do too many courses or anything like that. I literally just went straight to a person. I paid them for like um uh some information. I had like another like mentor, and that was just pretty much it. And they gave me what worked for them, and they had their own results. So when I got to the PTM stuff, that's when I started seeing like, oh, you could make basically trading decisions from macroeconomics. So with the PTM series, it's really like the ITPM. I don't know if I'm saying it correct. Pretty much what they trade, it's like a top down thing. So I'll just do like a reverse. So at the top, it's pretty much like your world. And I have it right next. Really, it's literally your world view, industry view, stock view, and then having discipline, which is basically like entering your free. I'll type that. I'll type it out. So with their stuff, it was just like, your worldview, which is just basically like GDP, global economics, and then you go into your sector view, which is kind of like based off of GDP or based off like certain macroeconomic group. Like you look at the non-manufacturing index or the manufacturing index, you might see, oh, real estate is going to do well. So or real estate, like building permits are going up. So building permits are going up. That means more things are going to get built. So there's going to something is going to change um, in the real estate sector. So in the sector, kind of just you know you do your own research. You figure out other details, and then based off the sector, you pick a stock. You know, you have your stock view, and that's when you kind of get into like quarterly, you know, their quarterly earnings, like their quarterly, like their quarterly earnings. I think it's like EPS. I'm probably saying some stuff wrong. It's like midnight and I'm recording this, but you just learn more about what the company is trying to do, and then you try to identify different stories at the company, different stories that could be happening that could either help you trade the stock, or if you feel like the certain stock is gonna not not do well compared to the sector, you just focus on investing in the sector, and then you look for something called catalyst events. So catalyst events are just things that will help push the trade in your favor, and that's really like kind of like their system. And then at the end of their system, which is like having discipline, that's when you get into like that you go back into the technical, the technical analysis, the timing, where you want the price action to line up with the catalyst event. So an easy example will be like if we just formed like let's go back to the old trade I talked about um on I'll say this happened on the Nasdaq future, where from a technical standpoint, right? It's a double top. So from a technical analysis standpoint, if I only had just had the technicals behind me, I sold. I did the correct thing. But when we look at the macro, we had a double top pattern, right? And we had a little bit of pullback. But then at the same time, we got a Fed rate decision might have that was like cutting rates, and it's kind of cutting rates and it's helping us combat inflation a little bit, right? We might not be at the rate we want to be at, but there's still more money to get out of the market before the Fed start tightening policy, right? There's still more time for equity to be flowing into the market. So even though on the technical side, Nasdaq or Nas 100 on the future side, it was showing us, oh, this is a sell. When we look at futures from macroeconomic standpoint, we're still bullish. So despite us seeing a sell signal on the technical side, the macroeconomics were still in favor of us being bullish. And then the catalyst event, right, would have been news example on that day. So that's kind of like what I end up spending like 2024 doing, where it's like I'm not really even on the charts anymore. I'm literally just, all right, fill out these sheets, do research, figure stuff out, figure out what's going on. And then a big thing for me too was that I started shifting into crypto. When I did the macroeconomics and I looked at how much effort I had to put into like Forex, I realized that the juice wasn't worth the squeeze. And this was something that I probably should have touched on later, but I didn't really understand it until now. Once I got to this chapter of my like trading career, where you want to seek out volatility. Like as a trader, you want to seek out volatility, which is just strong changes in price, because that's where you make money as a trader. When there is no volatility, meaning like there isn't a rapid change or difference in prices, right? You pretty much are a portfolio manager, which is mean you're just responsible for making sure the money grows or it stays the same. So there's all different types of like ways to set up your portfolio. Like you can be net long, right? Let me write this out. You could be net long, which is like a portfolio that's like geared towards just, you know, being bullish. You could be net short, and I might not be saying this correctly, right? Net short, where right now we could just have from a worldview perspective, we're in a example of where GDP is contracting, and GDP just means global domestic product, and that means you just feel like in the future businesses are going to shrink, so you might be net short because you want to protect yourself from the downside, because you don't want to be net short in a bullish environment, because you're going to just all your shorts are going to just get squeezed. You're going to lose money as the market goes up, and you don't want to be net long in a contracting environment, because now all your buys are just going down and you're going to be bleeding. And then you have strategies that are market neutral. And when we get to market neutral is where I kind of have been shifted into this new chapter where I'm at now, where I'm kind of in the algo trading. So it's a dude named Edward Thorpe, I believe. Yeah, Edward Thorpe. He's still alive, and pretty much I read this book, which is called a man for all market, right? And I'm gonna copy this. Like I've been deep into this, bro. Like I really been like studying. And then one thing too, I want to see more black people that look like me in some of the stuff that I've been studying. Of course, I know historically, black and brown people have been left out of the market, left out of the financial markets during different booms and like bonds stuff were going crazy and all this other stuff. So I just want to be, I want to be that person. I am that person right now. Just giving that information, participating in that market. That's my goal, to be that person to help share some of this information to capitalize off of these markets. I know I'm not the only one. Of course, there's bigger people than me right now. I think it's a guy Aristotle. Um, there's a dude online. I forgot his name. I found him on Twitter that trades options. Like, and these are, I'm just glad. Like, of course, I'm sure they probably have everybody has had some type of like scandal or whatever, but I'm not here to shame nobody. That's not what I'm on. I'm just here to just give information, help give back to. So when we talk about market neutral, it means like you don't care whether the macro, not that macroeconomics don't matter. It's just that you don't care whether the market is going up or down. So market neutral is like pretty much, it isn't always like a hedge. Like most people think of hedging. Like if you go all the way back to like the technical analysis aspect, you're like forex trader. Hedging, initially in your mind, hedging might just be like, yo, all right, we just draw a line. Like price here, and then I have sell here, then I have a buy here. So it's like it doesn't really matter where price goes, right? It doesn't matter where price goes because their their hedge is equally distant. Ideally, when you're hedging, right? All right, you put your long in and hit your, the long is in and hit your long. You X out the long and it comes down and sell. So that's a typical hedge, right? From a purely technical aspect. And when we get into the market neutral, it's not always just buying and selling on the same asset. And I think I kind of skipped some stuff with volatility, but I'll get back to that because I want to talk about like crypto, and I know this clock is about to go out. After this clock, I'm gonna keep going. It's important for me as well to just break this down and help people understand like the chapters that I'm going through trading, because this might be chapters that can help. Could be in your technical analysis phase, and now you add in a macroeconomic. You could have you could have just started in your algo phase. Might go back to just straight text, or as a good mix. Just learn as much as you can, so you can figure out what works for you at the day. Because I know people again that are fully technical analysis and they're dogs. They're eating. They get mad money. That's cool. I'm happy for them. That's a blessing. I know some people that's on the macro side. That's like, yo, I set and forget, bro. Like I've been holding this for 3 months. It did boom, boom, boom. I don't know too many people on the algo side. I've met, right, but it's like algo is like it's becoming such a competitive space, at least at the higher level, that nobody's really talking about it. They're gonna give you like a trash strategy on the internet. I mean, shoot, when I get my algo, I'm not giving it to y'all. I'm gonna keep it back because when you find market inefficiencies, find things like that can work, they're gonna get burnt out really quick. But let me just continue on where I'm at right now with the algo trading. So the algo trading, with the guy Edward Thorpe, man for Man All Markets, pretty much background on him is like, dude was a really nice mathematician. He learned how to beat the casino um in blackjack, and then he invented him and his friend invented a device to help them kind of just win more in roulette, and this is math. So from him, you're now like, dang, well, I figured out how to beat the casino. What if I could use this for the stock market? He ended up kind of like going down the path of using like math and like data science, figure out how to trade. And I'm not saying he's the king of market neutral. This is just a person that kind of put that in my brain, and I end up reading other books to help me go down this phase. Um, I'll just say I might be wrong. Don't quote me on this. Like you could buy, right, a hundred shares. We'll just say Apple. You could buy 100 shares of Apple, 100 shares of Apple, right? But then you also could, dang, I keep forgetting the word. It's not options, different thing. You could buy 100 shares of options, and you also could, let's say, you could buy, I'll just say something like you could buy puts. You could buy puts, of Apple. This is incorrect, but I'm just trying to get the concept out there. You could buy like 50, I don't know, 50 puts of Apple at a strike price of, I don't know, man, like 100, and then $100, right? So you're buying. So let's say you think that at the end of the year, right? Let's say Apple starts off the top of your $100, and you don't care whether Apple is bullish for the whole year or not. You just feel like, okay, I may know some information. This could be the sector, the sector or stock that I feel like Apple might not grow this year. Whatever. I'm not trying to pick on Apple. I'm not picking on any company specifically. I'm just using that first thing that comes to my mind. You buy the underlying shares of Apple, right? And of course, is not going to be one to one. There's like a little bit of math you got to do. But then you buy puts, so pretty much you're expecting like, so sales. I'm like, it could be out of the money. I'm not trying to get into science like options, but basically at the end of the year, let's say Apple goes to 125, something like that, right? Your shares are worth worth more money, right? Because instead of it went up in value, so now Apple is worth $125, and then the strike price at the end of the at whatever your puts expire, it expired but underneath the $150, so it's still your puts are still worth money. Of course, this is a huge discrepancy, but it's just an example to show you where you're taking both sides of a trade, right? You're taking both sides of a trade. So as long as you are within your parameters, make money. And market neutral doesn't always necessarily happen just on individual just on individual shares, right? And another example could be like it could be we'll just say kind of let's say like maybe it could be amongst like ETFs. Like I've been studying like the stocks that are within the Dow. So another trade idea or a market neutral potential market neutral idea. Don't quote me, not perfect. It could be all right. Let's say JP Morgan is a part of the Dow, right? And we notice a discrepancy. Like if JP Morgan is bullish, if JP Morgan is up 5% or something like that, you're gonna notice that I forgot what XLF, I think it's like the finance ETF. And XLF is, let's say XLF is down 5%, right? Um, we could be taking both sides of trades. I guess this is more like a pair trade. This is not necessarily market, more like a pair trade. You can this is like a different type of concept that I'm a little bit getting too far on. That just means for me personally, I have more learning that I need to really understand market. But the basis of market neutral is that you don't care whether the market is up or down. You are taking both sides in a structured way, so that way at the end of the day you make money, and it isn't always necessarily a one-to-one hedge. You can be using different instruments to trade the market, but market neutral, right? I've seen a lot of strategy and algorithms to do this, so that way you can balance your portfolio, balance the weight of certain shares, right? So in this chapter where I'm at, I'm trying to use the information, use the top down system that I learned in like the PTM series, and I'm trying to add a little bit of the add a little bit of the algorithm. So for me, it's been really like a very very steep learning curve because I mean, I have some familiarity with coding with like C sharp, tiny bit of Python, but the thing that we have now is literally like we have freaking AI. We literally have AI, bro. So I can from me messing with ChatGPT, from me like and even like for me even like messing with like DeepSeek. Now it's like I'm free to learn. I'm free to compete, right? Or at least step into the space of algo trading because I don't need to pay a program, right? I could just talk to ChatGPT because these are both for DeepSeek. These are both language learning models, and just communicate the strategy that I'm trying to communicate, the inefficiencies that I'm looking for, and it will help me develop the Python code or help me go through whatever. Like I was on Quant Connect, like go. I'll put that in. I'm still learning Quant Connect, by the way. I don't. It's a little bit. Quant Connect is a little bit annoying to me because like there's keep having issues with the ID and all that. But I'm on the planet. Like I'm not super deep. I know there's a lot of people who love Quant Connect. I've been doing it because I'm trying to get in the future. But with ChatGPT, DeepSeek, I can literally go like onto like Python and um start doing stuff like, and I'll just take a little. I'll do a little snip. I'll take some from my recent job now, just show you from my file and it's like these this is all recent. Like this is all within like the past like week of me, like messing with like Python to using ChatGPT and messing with like Python to like pull data from stocks. And now I'm trying to find correlations. Like I'm going through the process of like, all right, I'm trying to compare individual performance of a certain sector of stocks within the Dow Jones compared to the Dow, the Dow or the YM itself. And I'm trying to find these different correlations because we go back to technical analysis, right? Some of this stuff on this chart is noise, right? But we go back to the main arcing thing of like, go back into the overarching thing of trading for management. There's different sets of opportunities. Like 2024, a lot of my trades were like, and this is what I'll say like 2023, a lot of my trades were just like 1 hour, 4 hours, like max. I was like taking tons, tons of trades. 2024, it was like the average trade was like I'm holding it for like a week. Like these are like 1 week positions. Some positions are like almost like a month, and it's like way less trades. Now going to 2025, I kind of want to add a mix. Like I want to take advantage of the volatility on the lower time, but I want to automate it, right? So it's like I want to automate the shorter intraday opportunity using other people's money like funding, right? With like a simple or small strategy, and at the same time that to build the capital to be more like a uh portfolio manager because I don't want to be when I have my $200,000, I'm not trying to risk 20K on a 1 hour trade, right? I wanted to play out over the quarter. I wanted to play out. I want to take investment. I want to do that, and how I'm seeing future, at least for especially with like ChatGPT, and we're seeing crypto coming back into the main stage. The 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 subset of like assets that are available for us to trade and to find like price discrepancy becoming like huge. I would say with crypto there's with crypto is a little bit more barriers, right? At least like to get that kind of like top view or catalyst type of thing because these are like private companies, so they don't have they don't have the public information that some of these stocks are required to give us for us to figure out how they're doing. So for crypto, I want to do more algorithmic stuff where it's just like, yo, let's say like Chainlink's gonna move 15% in a day, right? And nobody's gonna even bat an eye. Like people shitters on Twitter are gonna be like, I told you Chainlink, but nobody's not gonna say anything. Versus like with Nvidia, like Nvidia dropped 17% in a day, and people lost their mind. They were freaking out. But then because it was so huge of a thing, and everybody is like, all the investors are looking at it. They just bought the whole dip. So it's like it dipped 17%, and then everybody just bought it up, mindless, just like, oh, Nvidia's on sale, let me just buy it up, regardless of whether or not Nvidia is still going to succeed against DeepSeek or other Chinese companies, knowing that they're doing more with less. But people are just like, oh, I got to see Nvidia on sale, I'm buying it. Boom. Of course, they probably had algos that are doing that too, like that are calculating the volatility, the volatility of certain assets as their advantage to arbitrage. But I think I just want to call it on this video to kind of talk about my trading journey, talk about where I'm at now, and how, I really, just to close it out, like I really use technical analysis as the foundation to my trading, right? It was the foundation. And now like macroeconomics is kind of like the 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 house, and algo is like the fancy stuff that's being added. In reality, if we really want to put it in a certain way, the true way is like macroeconomics, like damn near the whole house, right? Technical analysis, like the furniture, the fridge. Algo trading is like the power, the plumbing, stuff that's like running through the home to help it operate in a way that is actually livable, not just base. But I hope this video can help somebody. I hope this video can help some other people just see that trading is complex. Trading doesn't have to be one way. There's multiple ways to do this. Like personally, like I don't spend a lot of time on charts. I just don't. I spend more time trying to write code, uh, going when the news drops, updating my spreadsheet, and coming up with my own qualitative analysis. I'm not always on charts. I know there's tons and tons of like content. There's tons and tons of videos of people like telling you that there's a secret ICT strategy, and I'm like I guess like the reality is that everything works, right? But you find out what works. And for somebody who's looking at this video, some just stumbled upon this, hopefully what I'm saying to you, it resonates and it can help you figure out for yourself what. Because I think without that accident, I probably would have stayed in the technical analysis route. And I just encourage anybody that's trading, and don't use my video, don't use anybody else's video as for you spending time learning and actually falling in love with the craft and falling in love a way that makes sense. Don't be that person that's all day 24/7 trying to find that goal. It's not going to get you right. You got to go do your own research, your own practice, your own thing. Like fall off, got to fall off the bike, right? You got to take the training. You got to lose money, right? Lose money in the market. Make those dumb mistakes. You got to try new strategies that fail. You got to have those big wins. Also, not get caught up in worry. Start doing dumb stuff. Like just go through your own process, go through your journey, and don't compare your results. Right? Not every single person that you're trading has a huge bankroll. Some people start out with a bankroll. Some people don't have a bankroll. Some people are trading with a job. Some people are not trading with a job. Everybody has their own life. Everybody has their own results. Some people it happens fast. It takes a long time, right? But just stay locked in with your dream, stay locked in with your bars, stay locked in with like just where you are, right? And legitimately practice. And I promise that just having a little bit of success, having a little bit of, wins, not always about money, right? Last thing I'll say is find something important. It doesn't necessarily have to be a why, but find something within that motivates you, that pushes